Hello, welcome to the Villages, Florida. My name is David. I'm a realtor with Florida Realty Investments, and I can be reached at DavidisinFlorida at gmail.com. Every Monday, we take a look at the real estate market here in the Villages, Florida. We're going to be adding a second show. We're going to start by taking a look at properties that have had major price reductions to see if we can find anything interesting there or any other topic relating to real estate in the villages that catches our fancy. If you find any of this information informative or useful, please consider liking and subscribing. It really would help the channel grow. If you are interested in buying a home in the villages or Central Florida, or you're just trying to research an area to see if you can find a good deal, please reach out to me at DavidisinFlorida at gmail.com. Similarly, if you are interested in selling your home and are trying to maximize your return in a reasonable period of time, reach out to me at DavidisinFlorida at gmail.com. I'll be happy to help you in any way I can. Couple of things to note. First, all this information is drawn from the multiple listing service. It does not include any properties from the village's own internal listing service, the VLS. For that reason, you really should employ two brokers if you're a buyer. If you only have a VLS broker, you will not see MLS properties. And if you only have an MLS broker, you will not see VLS properties. We produce this show every Monday. Make sure you check the date to ensure you're getting the most recent information. So let's begin. As usual, we're going to start by taking a look at the 10-year note. Those who follow the channel will remember that the 10-year US government bond most closely tracks the mortgage rate. Traditionally, mortgage rates have been about 3% higher than the 10-year rate. Obviously, this fluctuates over time, but generally that's a good rule of thumb. And looking at this chart, you can see that after a period of consolidation, the 10-year yield is now heading higher. The rise in interest rates will undoubtedly have a great effect on real estate values. Please check the channel. We did a show over the weekend where we talked about the effect that rising interest rates is having on home affordability, both nationwide and in Florida. I think you'll find it illuminating. On this graph, you can see the 10-year note yield going back to early 2019, and it includes the low in April or so of 2020 when the 10-year bond was yielding less than 1/2 of 1%. When we did the show last week, it was yielding somewhere around 4.2%, and it's currently around 4.4%. But before we go on, let me give you an idea as to how bad things have become recently by zooming in a little bit on this chart. With this chart, we are zoomed in and are taking a look at basically the last year of interest rate activity. Interestingly enough, if you take a closer look at this graph, you can see that when we did the show last week, interest rates were about 4.3 and they're now about 4.55. So since we've done the show, the 10-year note has increased in yield by about 25 basis points or 1/4 of 1%. You would and should expect that mortgage rates have also increased by that much, possibly even more as lenders may be becoming more nervous. The biggest problem, obviously, in the interest rate market is that one never knows how high these rates will go. Rates have already increased from less than 3% to over 8% in some markets. Another 1% or so move in this 10-year note rate will mean we're looking at mortgage rates of close to 10%. Hard to imagine how many $1 million homes are going to be financed at mortgage interest rates of 10% or higher. But enough of that. Let's turn our attention now to the villages specifically. I've included a couple of new data points this week, and we've improved the graphs to make them more readable and hopefully let us extract more information from them. So without further ado, let's take a look at what's happening in the villages this week. We're going to start by taking a look at total listings. This week there are 296 listings, down very slightly from the 298 of last week, and still noticeably elevated from the 195 listings that was in effect for the same week last year. Prices for all listings range from $153,000 to just under $2.7 million. This is the first of our new graphs. It's a 4-week average of the median listing price per square foot. Helps to remove some of the jagged data points and give us a closer look at the underlying trend. Once again, this is the median listing price per square foot for all listings, not the average. Here we can segment all the listings and take a look at how many appear in each price segment and also broken down by week. For example, this week in the most active price segment, the three to $500,000 range, there are 184 properties for sale. This is a look at the median time on the market for all listings. And once again, we're looking at a 4 week average of the median time. Currently, 47 days on the market is the median time compared to 51 days on the market last week and compared to 41 days on the market for the same week a year ago. And for our last look at listings, this is a look at what percentage of listings have been on the market for 100 days or longer. As of today, 78 of the 296 listings are 100 days or older, which is 26%, identical to the 26% of last week. We're going to start taking a look at what percentage of sales take place for cash versus financing. So we're going to change the order of things starting this week, and we're going to look at sales next. For example, this is another new graph. This is the number of sales in every 7-day period, but it's average, so we get a slightly smoother graph. This last week saw 29 homes close compared to 34 the week before, and this compares to 21 the same week a year ago. Homes that sold ranged in price from $170,000 to $1,450,000. Yeah, we come to a new chart that people have been asking for, and this is a look at the homes that sold. What you're looking at here is data going back to January of this year to get some idea as to the number of sales that are for cash versus conventional, private VA, seller, FHA financing, etc. We only started gathering this data today, so I only have data for the beginning of each month, but it gives you some perspective where you look at the blue line, that is the number of cash buyers. The orange line is the number of conventional mortgages, and as you can see below, the other data points are almost too small to measure. But if we were interested in taking a look at what percentage of buyers were cash buyers, what would that look like? Well, it looks like this. The percentage of cash buyers since the beginning of the year, and keep in mind there are only 10 data points on this graph, but the fact seems to be that every week between 45 and 75% of buyers are cash buyers. The percentage of cash buyers doesn't seem to be increasing or decreasing to me. We'll obviously get more data and we'll start keeping this statistic on a weekly basis to get some idea as to what's happening. But as of now, the percentage of cash buyers since the beginning of the year seems little changed. So let's take a little deeper dive into the homes that sold last week, sold and closed that is, and get some idea as to what price segments they were in. This table once again shows you number of sales by week and by price segment. In the most active price segment, the $300,000 to $500,000 range, last week 17 homes sold and closed. Here we take a closer look at the homes that sold and closed last week. This time we're looking at the price per square foot and we're looking at a 4 week moving average. But when you look at the 246 and 251, those are actual numbers. So what this means is that last week the median price per square foot on the homes that sold was 246. The week before it was 251, and the graph represents the average for the prices realized per square foot on homes that sold for the prior 4 weeks. Here we take another look at the homes that sold and closed last week. This looks at how long they were on the market, i.e. how long before they went pending. Keep in mind, this is not homes that went pending last week. This is homes that sold and closed last week. Those homes were on the market for a median 25 days compared to 48 days the previous week and compared to 27 days the same week the prior year. And once again, we're looking at a graph that is a 4 week average of the median time on the market for the homes that closed over the prior 7 days. And our last look at homes that sold and closed last week. This time we're looking at how many of them, what percentage of them were on the market for 7 days or less before going pending. 8 of the 29 homes that closed last week were on the market for 7 days or less before going pending, which is 28% compared to 18% the week before. The data continues to indicate that no matter how weak some segments of this market may be, if you have a house that is attractively priced, it will attract buying interest and quickly. Now we compare new listings and homes that went pending over the last 7 days. Once again, we're looking at a 4-week average of these numbers. Last week saw 38 new listings compared to 37 the week before and compared to 21 same week a year ago. Homes that went pending numbered 25 compared to 31 the week before and compared to 24 the same week a year ago. I've moved to this new graph because I think it more clearly illustrates the problem, which seems to be that the number of pending home sales has been declining now for the last 6 months at the same time as the number of new listings appears to be picking up again for the snowbird selling season. Looking more closely at the homes that went pending over the last 7 days, here we look at the median price per square foot that they were last listed at. For the last 7 days, it was 262.95 compared to 265.04 for the previous week. This is still higher than the 260.53 median price per square foot for the homes that went pending the same week last year. If we want to try to get some idea as to how aggressive buyers are in this market, we could take a look at this graph, which shows us the median time on the market for the homes that went pending over the last 7 days. Once again, we've moved to a 4-week average of the median time to smooth the graph, which should give us a clearer look at emerging trends. For the last week, 40 days on the market was the median time for the homes that went pending, which is double the 21 days that was in effect the previous week, and this compares to 23 days for the same week last year. Another look at the homes that went pending last week. This time we're looking at what the price change was from the original listing price. And once again, this graph is showing us a 4-week average so that we can get a smoother graph and a closer look at any emerging trends. The homes that went pending last week saw a median price change of a reduction of 6.35% compared to 5.61 for the previous week, and a big improvement actually from the almost 8% reduction for the homes that went pending for the same week last year. Let's now take a look at what percentage of properties have reduced their asking price from their original listing price. Which brings us to this chart, which is once again a 4-week average of the percentage of homes that have reduced their asking price from the original listing price. The 53.04 is the actual reduction from last week compared to 55.59 for the previous week and compared to 55.9 for the same week last year. It's interesting to note that the percentage of listings with a price reduction is lower than the percentage of listings that had a price reduction the same week last year. Once again, this graph is a 4-week average of the data. And this shows us what the decrease actually was. This is the median percentage decrease for all listings, and it's been smoothed over the prior 4 weeks to give us more of a trend and remove some of the volatility from the data. But the 4.41% decrease is the actual decrease currently in effect for all listings in the villages, compared to 4.49 the previous week and compared to 4.26 the same week last year. So that concludes this week's look at the Villages real estate market. We are very open to any ideas or any data analysis that you think would be illuminating for people who follow this channel. Please reach out to me either in the comments or at my email, which is DavidisinFlorida@gmail.com. Once again, I am a realtor with Florida Realty Investments. If you're looking to buy a home in the Villages and you're trying to get a good price, or you are trying to sell your home in the Villages and you're trying to maximize your return in a reasonable period of time, please reach out to me at DavidisinFlorida@gmail.com. I'll be happy to help you in any way I can, advise you, answer questions, or help generally. I hope to hear from you. Take care.